All right, 17 reasons why you should buy real estate in 2025. Number 1, I think your timing could be very good on this cycle. In the past, the longest downturn that we've had for Vancouver real estate started in 1995, and it took us 8 years to get back to the peak of where pricing previously was. However, the bottom in that cycle happened about 4 years in, and then the next 4 years we spent climbing up out of that trough. Today, we are now 3 years in to this housing correction, meaning if we were to base it on our 1995 housing correction, we would only be about a year away from the bottom of pricing. Typically, Vancouver tends to operate in about 5-year cycles, and the reason for that is the build cycle. When prices start going down, builders stop building less and less and less, and then we feel that 2, 3, 4 years in the future, there is less supply coming to market, and if demand stays the same, that's what sparks a price reversal and a new bull trend. Number 2, fundamental investing says that you should fade the narrative. Meaning, whatever the market sentiment is, you should do the opposite of that. And the best investor of our time, Warren Buffett, says buy when others are fearful, sell when others are greedy. And if you look at the market sentiment right now, people are absolutely terrified. Market sentiment is horrible. So if you were to buy right now, you would be buying when others are fearful. You would be fading the common narrative. Number 3, there is tons of inventory to choose from. Basically, since the 90s, when we experienced our last downturn and came out of that, buyers have had very limited choices when it comes to purchasing real estate. And there have been maybe a year or two here and there when more inventory came to market, but pretty much for the last 3 decades, it has been very difficult to have your pick of quality inventory. Today, there is tons of quality inventory, and not only can you choose between different units that are on the market, you have time to think and you can put subjects in your offer. Which brings me to number 4. You can put subjects in your offer. You can safely buy real estate. You don't have to write in multiple offers, compete against 3, 5, 6, 7 other people, and go subject free with no financing or inspection. You can safely buy a home with an inspection subject. You can read through the strata docs with enough time, and you can also make sure that you can get financing on this purchase. Which brings me to number 5. You can negotiate both the terms and the price. You can get the move-in date that you want most of the time. You can get a good price. And then even after the inspection, I've pretty much every single time been able to negotiate an even better deal after we get the inspection report back, which again hasn't been a typical thing for this market for the last 3 decades. Number 6, although interest rates are historically high, or at least high in comparison to the levels of debt and the purchase prices of homes right now, there is a very high likelihood that interest rates are going to be lower in the coming years. Meaning if you buy today, you should be able to refinance into a lower mortgage rate later on. And typically speaking, once interest rates come down and people can afford to borrow more, that is usually leveled out by people bidding up the price of homes. So you buy with a higher rate instead of a higher price, and then you refinance when the prices are higher, and then now you've made money and you have a lower interest rate. And I'm not saying that's going to happen. I'm just saying there is a decent enough likelihood that that could be the case. Number 7, now people are talking about cap rates and how bad cap rates are for investors, and I agree. However, cap rates have never been good, and typically when you invest in property, the first 3 years you're cash flow negative, the cap rates are terrible, and then you can usually refinance or rents have gone up, which leads to a better cap rate later on. As an example, when I bought my condo in Abbotsford, it only rented for about $1,100 at the time. My mortgage was $1,000, so I would have been cash flow negative as an investor. However, 6 years later, it rented for $2,100 a month, and even at the peak of interest rates, my mortgage rate was only about $1,300 a month. So I would have been cash flow positive probably $300 or $400 a month 6 years later. And again, maybe 2 years earlier to that, I probably would have been cash flow positive about 4 years in. So yes, cap rates do suck right now. However, that's always been the case, and typically people are buying knowing that the market favors better cap rates later on, rents go up and mortgages go up and purchase prices go up, but your mortgage stays the same or roughly the same, or in this instance, could actually get cheaper. Hey, I like to invest in US equities And I've tried a bunch of brokerages, not to throw shade at Interactive Brokers or Questrade. I used Questrade for a very long time, but I switched to Webull. And the reason why I switched to Webull is I just found their user interface to be way better, way easier to understand, and it was way easier to get money into my account on Webull. And I like to trade options, and options trading on Webull are super, super cheap in comparison to at least a Questrade. Again, I'm not throwing shade at those companies because I still use them and I have used them for a long time, but my favorite personally is Webull. And I now have an affiliate partnership with Webull, and I turn down a lot of affiliate partnerships. Like every week I turn them down, and I only want to take the ones that I personally believe in. So if you like investing in stocks, I would recommend that you use Webull. And if you want to use my link and make me a couple bucks, there's a link down in the description where you can open up an account with Webull. Number 8, the Canadian dollar is dropping. Now, this could be seen as a negative, but I actually think it's a positive. Typically, when the Canadian dollar drops, it's not that the dollar is dropping, it's just that everything else in comparison to the dollar is actually going up in value. That's how the dollar is going down. It's just that everything else around it is going up and you need more dollars to purchase the same thing. And housing is included in that. So the dollar can only drop for so long before it's reflected in higher housing prices. With real estate that's in a downtrend, it's almost fighting an intrinsic uptrend. Intrinsically, housing prices are rigged to the upside because of our fiat currency. Price appreciation is basically baked into the financial system for the most part, unless things go really, really wrong. And hey, if you were to buy real estate cash, let's say you buy a house $1 million cash, and that house goes up 5%, but the dollar drops 5%. On a real adjusted basis, you've made no money. However, if you buy that house, that $1 million house with 200 grand down, leveraged at 5x, when the house appreciates 5%, it goes up 50 grand. So you have made $50,000 divided by $200,000. You have made basically a 20% return, 25% return. So if you own that house cash, you don't make any money. But because your house is leveraged at 5x, you're still making roughly a 20% return on a real adjusted basis. And I think that the Canadian dollar quite obviously is going to continue to depreciate. And I think at some point that's going to result in higher housing prices, whether it's this year, next year, or the year after that, or the year after that year. Number 9, there is very little supply coming to market 2027 onwards. We have a lot of supply coming in 2025. We have a lot of supply coming in 2026, but because housing starts have been at decade lows for the last couple years, that will show up as low supply 2-3 years out, 4 years out, because it takes about that amount of time for these projects to be built. So come 2027, we will have very little supply actually coming to market, actually finished being built. And if demand stays the same or even goes up, that is what sparks the price reversal. I talked about this, I think, in the number 1 portion of this video. That is why the housing market operates in cycles. It's because of the build cycle. 2027 is basically the end of this build cycle. We have basically nothing completing come 2027, and there's a very good chance that that will spark a new bull cycle for Vancouver real estate. 10, if you're buying a detached home, I think it's a very safe buy. We're not building any detached homes, right? If you're talking about condos, we're building less condos. If you're talking about detached homes, we're building no detached homes, and we're tearing them down every year to replace them with condos. So every year, the amount of overall existing supply of detached homes goes down. And again, intrinsically, price appreciation is kind of baked into the monetary system. So you have supply dropping and more money flooding the system every year. Eventually, that is going to result in a higher purchase price for detached homes. Unless, of course, there are less people coming into the areas where these detached homes reside, which is a possibility. But I think detached homes overall are a safe buy for price appreciation. 11, renting is cheaper, but you have to get pretty lucky. Renting is historically only cheaper for a couple years, and then something that basically creates that situation will change, and then renting no longer becomes the cheaper option. Maybe renting is cheaper for 2 years, 3 years, but if the housing market starts going up again, now you're in a situation where rent has likely gone up, The purchase price of a home has likely gone up, and yes, it's still cheaper to rent. However, had you initially bought 3 years ago, your mortgage might be cheaper than the rent that you're paying today. On top of that, there's no guarantees that a landlord is going to allow you to stay in your home for longer than a year, 2 years. You may have to move more often than you'd like, pay for movers, take time off work to move. And then of course, there's no guarantee that the rent you pay in the next house that you find isn't substantially higher than the rent that you're paying right now. I personally like the security of owning a home, knowing that my mortgage payment is getting devalued every single year as the Canadian dollar drops, and knowing that eventually at some point the bulk of my mortgage will be paid off, providing me some security and options within my life. And then number 12, the average net worth of a homeowner is 30 times higher than a renter. That statistic alone would tell you that if you just bought a home, your net worth will likely be 30 times higher than if you chose to rent. That statistic doesn't have to remain true over the next 30 years. However, I don't think it would be a good bet to make. 13, as I've talked about, financial markets are rigged to go higher. The government does not want to see a real estate collapse, and they will pull out all the stops to ensure that that doesn't happen. Whether it's QE, playing with mortgages, extending amortizations, getting rid of the stress test, dropping interest rates, everything in their power. And our prime minister even said it himself that he doesn't want home prices to go down because that is a lot of people's retirement plan. Then you just have the overall monetary system as a whole, which intrinsically is baked for higher prices with the addition of inflation. The prices of assets, commodities, and everything are basically forced to go up year over year because of the way our monetary system works. 14, if you're buying a home, you get the freedom of choice. You get to customize your home. You get to choose the paint, the renovations that you want to do. You get to choose where exactly you want to live, the neighborhood you want to live in, and all of these things. And you also get to choose how long you want to live there. These are things that you don't get while you're renting. And it's hard for me to put a price on that. I don't think money brings happiness, but I think freedom and options brings happiness. And the more options that you have in your life, the happier you'll be. And the more money that you have, the more options that you have. And I think owning a home just affords you a lot more optionality within your life, which should lead to more happiness. 15, pre-sale projects are launching at prices and incentives I've never seen before. Pre-sale projects are launching with super low deposits, 5, 10%, or 5% now, 5% in a year. Typically 15% has been super common. On top of that, you're getting AC, parking, storage, and all of these things that you would normally have to pay extra for on top of the purchase price of those homes already being super low in comparison to even resale values. I'm seeing pre-sales launch below resale values that have all of these incentives, and you can put down super low deposits and wait till mid-2027 when hopefully things are a lot better and you're completing in that situation where there is a lot less supply coming to market. 16, real estate is the easiest way to build wealth versus stocks or any other investment, in my opinion, and I'll tell you why. Real estate is a very unemotional investment. If you buy stocks, you're going to be looking at your stocks app every day. You're going to be emotional. There's going to be a new piece of news trying to FUD you out of your investment. It's very easy for you to log in and hit a sell button. Real estate is so illiquid that I believe it actually helps the average investor. It is very difficult to make a mistake. It is very difficult to sell out of fear. Even if something really, really bad happened that scared you, you would still have to call your realtor, call your tenant, set everything out, pictures, photos, floor plans, put it on the market. And by the time it's sold, we're talking 3-4 months from now, you probably wouldn't be scared anymore. Something would have likely changed at that point to not make you FUD or scare out of your position. And for that reason, this is why I believe the average homeowner has 30 times more wealth than the average renter, because it is significantly more difficult to be successful in the stock market than it is to be successful in just owning a home, forgetting that you own it, and then just checking the price 8 years from now and being like, oh, I made $300,000. 17, as affordable markets continue to appreciate, the delta between them will close. And this is what I'm talking about. When Vancouver went up like crazy in 2021, Calgary did basically nothing. And then through the back end of 2022, Calgary's real estate market started rallying. And that's because there was a price delta between Vancouver and Calgary. Vancouver did this. That made Calgary super, super attractive. A bunch of people migrated to Calgary and pushed those prices up. Now Calgary's real estate market is starting to roll over and flatten out just like Vancouver's did. However, now you have Calgary and Edmonton. And as you can see, Edmonton is starting to go up as well. What ends up happening is in these Calgary and Edmonton markets, you'll have a bunch of people who have been living there for 15, 20 years, who now their properties have gone up $200,000, $300,000, $400,000. And now they're in a situation where Vancouver's gone down, Calgary's gone up, Edmonton's gone up. They can take the money that they made in Edmonton, so Edmonton's up, Vancouver's down, and they can move over to Vancouver. I talked to so many people in Edmonton, Calgary, like, oh, we just want to be in Vancouver. We just want to be in Vancouver. And now it's getting to the point where they can actually capitalize on that opportunity and make that move because they have hundreds of thousands of dollars in equity, and Vancouver has gone down and remained flat for years. And I think you're going to see less interprovincial migration over to these cities in the next year or two as the prices of them have gone up substantially. And you're probably going to see more people moving back to BC who have made a bunch of money in these provinces. And that will reflect in a little bit more buyer demand for the BC real estate market. So there's 17 reasons why I think you should buy real estate. If you want to watch the video that I think I'm going to post today on the 17 reasons why you shouldn't buy real estate, I'm going to leave it right here. If you want to chat with me about buying or selling real estate in the Fraser Valley, you can book a call using the link in my description. Otherwise, appreciate you. Like, subscribe. I'm that Agent Kelly, and I'm making moves to move you. Peace.